Well, sports fans, looks like we may finally have a breakout on our hands, but as I'm making this video, price seems to be reversing a bit. But of course, we still have 20 minutes till candle close to take this breakout trade. So, at long last, it's only taking until Thursday. So, a couple interesting features here. I almost kicked myself for not taking it earlier, but then again, it didn't fit with my with the way I've been taking my trades. So we essentially saw a slight retrace to the area of the fib. The only thing that scared me is it was outside the previously established trend lines. We got a bearish engulfing candle here after an up move. So we know, if you guys have been following along, what my qualifications for a reversal are. There was context, there was a support and resistance, and then there was a valid candlestick formation. Those three things could have possibly been entered. I'm been a little bit strict with the rules. That was probably a decent entry. If I had taken the entry, it's already run 81 pips. So, but that being said, I didn't take it. But it looks like I'm going to be entering at this candle close here, and this single hourly candle from top to bottom is about 60 pips. That's about prime, I would say. It's big enough, and that's what I'm saying. Gold usually is a no doubt when it makes a breakout. Some people could have seen that as a breakout, but I wouldn't. Gold usually gives you no doubt that it's going to be a breakout. So we have all the features we need. We're re-breaking back inside trend lines, breaking below our area of fib, breaking below previously established range that I discussed before. So assuming that we do end up closing outside of where this area is, I'll be entering the short trade at the end of this candle. Like I said, usually the prime breakout candle size is between 60 and 80 pips, 50 and 80 pips. So as long as it doesn't extend too much further from where it is, and as long as it doesn't retrace too much further, this would probably be an ideal candle. Where this candle close is going to be 1 hour before New York opens, which puts us also time-wise in a good place. So hopefully we can expect some good moves here. First profit target would be around 74, which, even if we take it at the extreme, it gives us 38 pips to get our stop moved. But really, looking down, the next place is much further, where I'm going to be placing my profit target. It's about 120 pips away, 130 pips away from the extreme, so we probably get a better position than the extreme of this candle. But we'll see how the trade progresses. So assuming this finishes up in 19 minutes where it is, then we'll get short and we'll keep track of the trade. Catch you in a little bit. Hey guys, Omar here with the result of that 1 hour breakout I took. You see, this is what I was talking about with the pair never looking back. So we entered right at candle close. This candle has powered down. We immediately burst out within like 10 minutes of candle close. We burst out another 80 pips. Currently my stop has been trailed down, so I guarantee myself, let's see here, guarantee myself about 40 pips. If it doesn't end up, if it does end up closing me out before this candle is over, I will look to re-enter on a breakout of the lower trend line. But I'm not going to move my stop. It could just power down some more, but if it takes me out, it takes me out. That's, between the 2 hour candles, we're talking about a total move of 130 pips in 2 hours. So it wouldn't surprise me one bit to get a reversal now. So we'll check back here in a little bit, but so far things are looking good. Hey guys, Omar here again. Last time we left off, I was in the trade and I was debating whether to take a second position at the candle close. It did go for another 30 pips. I just didn't take it because I didn't feel that it was a good enough breakout, and I started to think about it from if I hadn't taken my first trade would I want to take this breakout to get into the market? And I just couldn't convince myself that it was a good idea following two single-hour candles that had moved so strongly. Although that didn't mean that things couldn't have gone further south. I just couldn't convince myself to take a trade based off of that information. It seemed like a good idea because I was up. I ended up taking 50 pips out of the trade, which I'm totally happy about. And I'm glad that we caught finally a good-looking breakout on tape, so that we had something to review. Now, if you're wondering what happened to those giant candles that were on the screen, well, it's simple fact is that 2 hours later we had a monster, and that's a single hour over 200 pip candle. Let's go ahead and just see if we can get it marked. Oh, of course, it went right to 250 pip candle. It went right to our area of support and resistance, which, again, don't try to pick the areas that we don't know, but usually they will come back to a support and resistance area. I just have never been able to accurately identify which one it's going to pull back to, especially 250 pip single hour candle. I was actually looking for the reversal trade. It's funny because I saw this here. I decided not to take the breakout. I ended up getting stopped out. If this candle had come back inside the channel and made a stronger showing, I would have gone long. I just, now obviously I wish I had, but at the time it just didn't seem, it seemed like, was this a pullback or not? I was considering if we got a pullback to the trend line and then we had a subsequent candle that looked like a good move down, I would get in after that one. But this pullback, I wasn't sure if it was just a pullback or if it was a reversal. I'm glad I didn't obviously take the short. That's why I look for the breakout and then go in after the breakout rather than for the pullback on the next hour. But anyway, we rocketed up, and what we have to consider now is that have we broken this leg, so to speak? And if I pulled up a 4-hour chart here, and you can see that actually we did have a pretty decent trend line in place, for 9-10 days. So this could be the signifying point of a breakthrough, that we might start looking more for long trades now. And so what would it take for me to see that as the next possibility? Well, I would definitely want to see the next move, and since we're coming into a Friday market, I don't think it's going to happen. I'm going to watch a couple hours into London and see. And we want to see a strong breakout to the upside now to tell us that that is in fact what's going to happen. We don't really have a good bottom part for the triangle, actually. I like a more established bottom, so we'll just leave it as such for right now. But essentially, we have broken back above this fib in a strong way, and now the next move up would signify to me that maybe we should start looking for long trades again. And that would be a break above the psychological number of 1300, and we'd be heading up towards 1312, which is the next major fib level we're concerned with. It makes sense. It makes sense, but again, I'm going to be waiting for the breakout. So, but what if it just, what if this just ends up being a spike, and the next move is to break back down below the 50% fib that we've been watching? Well, I'll take the short. That's the beauty of it, is we don't have to get sold on direction. We use it. We definitely use it. As you've seen me scrub by now, I think you've probably seen the video I made before this. You saw me scrub trades because I didn't like the direction. Of course, those trades did produce a little bit of profit too, even on the smaller breakout. But anyway, we just want to try to keep it simple. If there is a potential, buy or sell coming up in this next session, I'll try to get it on tape again. But I was really happy to see in one of the comments that at least one of you guys got the trade that I caught on tape. So good job. We'll catch you next week with the article, or actually I'm not even sure when you'll be watching this. But anyway, catch you soon. Bye-bye. Hey folks, I know I said the last one was the last one, but I'll finish it up with this. Since it was Friday, I didn't take the trade. They don't always work out very well on Friday, and they can reverse even with good signals. I didn't think this was that great of a signal because it didn't. If it would have cleared, that support and resistance, I may have taken it, but it didn't. And you can see 2 hours later, it really didn't. By that time, I just said, it's a Friday market, I'm gonna go. But had you taken the original break of the trend line that we had in place, it ended up going 107 pips in a matter of hours on a Friday. So, I mean, there's definitely, and you can see the moves go pretty much in a straight line once you catch them straight. So you don't have to worry much about drawdown. I'm actually even considering revising my stops smaller. But again, we've seen very, very, very mellow markets over the last few weeks in gold. There are times where they're much spikier and more volatile, and we still want to make money in those markets. So that's what the rules were developed from. Anyway, I hope everybody is enjoying their trading, and I will catch you in the next video. Bye.